Hey everyone, welcome back to Inside Business. Today I'm joined by Julia, Managing Director at JP Morgan. Thank you so much for coming on the show.
Thank you, David, for having me. I'm excited to be here.
So to jump right in, can you introduce yourself and walk us through your background and how you got to where you are today?
Yeah, absolutely. Happy to do it. So, Julia Grinshpun, I'm Managing Director at JP Morgan's Commercial and Investment Bank division. And I'm part of our innovation economy team and focused specifically on covering companies in the climate tech sector. Our team works with early stage high growth companies and helps them from idea to IPO and beyond in every which way that we as a firm can assist clients and navigate every cycle with them. I've been in this role since we started the team about 5 years ago. And prior to that, I spent most of my career at Wells Fargo in a variety of different finance and banking roles, starting as a personal banker in the branch through the licensed banker program, following my way back into the commercial side of the bank and being a financial analyst and growing through the commercial bank at Wells Fargo before pivoting into the renewable energy space and spending about 4.5 years learning and being part of the renewable energy investments team at Wells Fargo that was focused on investing in utility scale and commercial solar, wind, fuel cell projects for benefit of tax credits before making the jump over into JP Morgan.
How did you first get into finance?
It's a great question. It definitely wasn't a lifelong plan that necessarily came about. I had studied business economics at UC Santa Barbara and also minored in Spanish. So always have had an interest in finance and explored a couple of different avenues upon graduation, as well as during school to figure out my interest in business, working with companies, and explored not only banking as well as other avenues as part of looking for a job out of school. Ultimately, the banking element came together in a little bit of an ad hoc way. It was a more challenging job market at the time and was exploring a number of different opportunities, and the opportunity to join a licensed banking program at Wells Fargo seemed interesting. It was a combination of working with clients, having the opportunity to get my securities licenses and deepen my knowledge in investments. And that's really where I ended up starting out of school.
So how exactly did you land your first role at Wells Fargo? I know you picked up a little bit about that. And what was that early banking experience like?
Yeah, great question. I think ultimately college did give me a great foundation for understanding the finance basics through accounting, a lot of case study work, and understanding just the pure economics of business, companies and business. And that led me to ultimately be able to work within the banking space. As far as looking at jobs, ultimately was applying at the time to a myriad of different opportunities. I was interviewing Wells Fargo, I was interviewing at a couple of other banking opportunities. And that program seemed most attractive at the time because as a student, you often want to find a way into the business world that also has some sort of a training program attached to it. And that's what interested me when I did come upon that program, and being able to have the opportunity to learn on the job, be able to get licensing, and be paid for and essentially be guided through that process in the first 3 months of the job were key areas of focus for me as a newly graduated student out of college. So those were a couple of the elements that I was considering at the time. But to be candid, it also, as I mentioned, was just a more challenging business environment, and I don't think that the amount of roles at the time also impacted my decision making at that moment.
So you moved from Wells Fargo to JP Morgan in around 2021, is that right?
Yes, that's correct.
So what was behind that decision and what was it like switching firms after almost 2 decades at one place?
Yeah, great question. So maybe I'll spend just a little bit of talking about what led me into the sustainability space. When I was at Wells Fargo, I had worked with a lot of different companies throughout my career. As I went into the commercial side of the bank after the licensed banker program, I worked with medium-sized businesses, predominantly private. I also spent time in the leverage buyout group where we worked with a lot of private equity firms and helped finance buyouts of companies. That was sector agnostic for a number of years. I subsequently worked in a group that was focused on working with global companies, both public and private, that had either overseas headquartered companies or subsidiaries that were based overseas. And it was through that work that I worked with a family run private company in the coffee space. And through working with them, I learned a ton about their business, but more importantly, I realized that they were very focused on building a sustainable business beyond being a coffee company. And much of the work that they had done in their supply chain was around ensuring that their supply chain was well handled, that their overseas partners were well taken care of, had great sustainable practices in terms of packaging and making sure that there was no waste or as little waste as possible in the supply chain. And that ultimately had me reflect on what kind of work I wanted to do within finance. Banking is a great opportunity. It allows you to work with a lot of companies. And through that work, I realized that I wanted to have a bit more of an impact with my day-to-day work. And I started to work with other folks, interview others in terms of what they were doing in the impact investing space and sustainability. And that led me to work in the renewable energy team at Wells Fargo at the time. It was an area that I didn't know a lot about, but ultimately wanted to learn, and the team gave me the opportunity to come on board and understand how utilities work, how the renewable energy projects are built, what it takes to procure power, and the entire ecosystem. And I found it to be fascinating. It is such a interesting, complex set of rules and opportunities and stakeholders, regulatory markets. It ultimately touches on pretty much everything in terms of the fast pace at which the industry moves and the complexity with which power is brought to our homes and our businesses. And so I really enjoyed working on that team. It gave me a great, challenging learning opportunity. And as part of my work there, when I had learned of the work that JP Morgan was doing, I was curious to understand what they were doing in the space. And as they were forming the team that I am part of now, I took the time to understand what they were building and working with a lot of early stage companies in the energy transition and climate tech sector. I looked at that and I thought it was going to be an interesting opportunity to broaden my horizons beyond just renewable energy and look at companies that are in the early stage space tackling very hard problems. Everything from building batteries, building cars, making our buildings more efficient, bringing novel technology in the food and ag space, and much more. And thought that could be an interesting opportunity as my next chapter, and that's what brought me to the team that I'm in now.
So, talking about your clean energy field, do you notice any big gaps in the clean energy financing right now?
It's a very dynamic space, and given that the problems that most of the companies are tackling are more often than not hardware problems and tend to be very capital intensive, which means a lot of capital needs to be raised. And more often than not, companies are building first of a kind projects, they're building first of a kind factories. And so that lends itself to large amounts of capital needed to support it, both debt and equity. And oftentimes what we find is that those are bespoke asks on the debt financing side. They tend to be not just in the form of like venture debt, which oftentimes is a mechanism that a lot of companies use in the broader VC-backed ecosystem, but much more capital needs to be built into the capital stack whether it's from the government, whether it's from grants, and it's usually a combination of funding sources that need to be cobbled together in order to meet the needs of the energy transition, given the amount of hardware that needs to be built, factories that need to be brought online. And so it often ends up being a challenging equation to solve, but one that we thrive to work on our team.
Did you get any exposure to sustainability when you were younger, or did this just happen when you were in your later years in Wells Fargo and that kind of thing?
Yeah, no, it's a great question. I had actually spent time thinking about it and reflecting back on my time at UC Santa Barbara. I actually wish I had studied environmental studies because that was a pretty dominant area at the school, but I had not actually studied it then and probably didn't have it as a dominant interest necessarily earlier. I will say that everyone in my family is in the sciences, predominantly except myself, and so part of me thinks that some of that interest probably deeper down inside comes from some of the chemistry, biology, and other interests that I enjoyed in school, and it in some ways kind of came together into the role that I'm in now. And otherwise, I think it was just something that was developed over time and realized kind of later in my career.
Did you always know you wanted to work for one of the big banks?
No, I don't. I wouldn't say that was necessarily the plan. I would say my career wasn't something that was quote unquote planned out. It was something that evolved over time, and there wasn't necessarily a clear path along the way that was followed. I think it was constant curiosity along the way, and working at Wells Fargo for the amount of years that I was there. Ultimately, I felt like I always had the opportunity to find new areas of interest that allowed me to grow and develop new skills, learn new areas in terms of business, work with different companies. And I think given the opportunity to work with a variety of companies keeps the job interesting. You're never bored, at least that's my personal opinion, just because you're always challenged mentally in terms of understanding the businesses that you're working with, how best to help them in their growth cycle, whether that's strategic acquisitions, financing, other guidance that you can provide to those companies. And so banking has kind of been that fortunate opportunity set throughout my professional career, but it wasn't anything that I had intentionally thought of when I was in college, to be fair.
What's one thing you wish your younger self knew that would have not necessarily changed your life, but improved the stage where you're at today, if that kind of makes sense?
Yeah, I think networking and building really strong communication skills is extremely paramount in the time that we're living in today. And it is probably an area that I didn't spend as much time on when I was much younger, and whether that was during college itself or even in my early career stages. It probably could have been an area of more focus than it was at the time, and I think that could have helped me even more. And I would give that advice to others in their early days of college and career journeys, is to spend as much time getting to know people, conducting informal interviews, getting to know folks, and learning what it is that excites them, to then allow yourself to discover interests for on your own. And it is through learning from others that I think a lot can be had.
What skills do you think are actually important for someone who wants to get into finance? For example, someone like my age.
Yeah, I think it's really important to have the fundamental finance skills and understand business, understand how companies put their financials together. I think that accounting is fundamental, and certain attributes around just the way companies run business is I'm going to say table stakes in terms of understanding business operations and being really attuned to the finance world. And coming back to the idea of communication, I want to underscore that it's very important to be able to understand fundamentals, but it's equally important to be able to be a very effective communicator. Being able to synthesize stories really well, being able to synthesize complex business situations or business operations in a succinct and an impactful way goes a long way, I think, in the business world. So honing those skills early, I think, is really, really critical and will serve anyone well in whatever role you end up having in the business world.
You've had a long career. What would you say was your biggest setback?
Oh, that's a great question. I don't know that I've necessarily had a setback. I think I've had moments where there were great learning opportunities around certain transactions or certain deals that you learn sometimes about the opportunity, you learn a little bit about yourself, and I think that they're actually important to have, and it's never a smooth ride in any role or any business division that you may be in. There are always going to be challenges, and it's important, I think, to actually face them, to understand areas for growth, areas for interest. And so I would say that the setbacks were more around, or if I could call them setbacks, were more just around opportunities to reflect on, okay, here's a situation that was really challenging and it was maybe not the most favorable outcome, and here's what I learned from it, and here's what that means for me as a person, and here's how I sort of take that forward from a opportunity to work better or opportunity to maybe pivot into a different direction. And sometimes, you get a little bit stale maybe in a certain role, so it's important to, I think, ask yourself, what are my skills? What are my interests? Can I take both of them together, and can I maybe pivot into a different direction? And how do I position myself for that opportunity to sort of advance yourself in a career trajectory that is of interest to you at times where you may be getting a little bit bored or it may not be the right fit. And I think, again, you could look at that as a little bit of a lull or a setback, but ultimately I think those are like really important inflection points in people's careers, and it's important to, I think, be attuned to them and take the time to actually understand what to make of those situations, because I think so many people will maybe not take enough time to understand that and consult with mentors, consult with other folks on how best to then apply yourself in new ways and explore new opportunities.
Do you need do you have an MBA?
I do not.
Okay, this is a I'd say fairly asked question. Do you need an MBA to make it to the top?
It's a great question. I think you will probably end up hearing different views on it depending on who you speak with. And I also think that it's probably an ever evolving answer in the current environment that we're all in. I have worked with a lot of people throughout my career and have met some great folks that have MBAs, have various different degrees, whether it's masters and in other programs as well. And I think that those are absolutely valuable programs. As far as, do you absolutely need it? I think it can be an it depends answer, in the sense that where are you trying to go and what is going to be most relevant to your career path. And there is so much to be said for doing great work, working really hard at where you are at that moment in time, and usually your work will speak for itself. and your desire and your interest and your curiosity will also help support recognition in the working world. So to the extent you want to continue to grow in the organization that you're in, whether that's a bank or a company or another financial firm, having that can oftentimes allow you to progress without necessarily having an additional degree. And then it's a question of what's your background before that? Does it help you sort of supplement, non-business maybe background, and an MBA is helpful to ground you in foundational skills for finance? That can absolutely be helpful, but I have absolutely seen people who have progressed, including myself, without necessarily pursuing the MBA, even though I actually did consider it, and more than once. At the time, there was an opportunity to actually expand my role and take on more responsibility as I was concurrently exploring an MBA. So that was a bit of a deciding factor at the moment in time. And there's always going to be forks in the road, and you have to sort of make judgment calls of what makes sense at that point in time. And I think it's one of those things that once you get into the business world, you start to understand hopefully where your interests are and what maybe gaps folks have that they want to fill in. But I don't think that it's going to be a deterrent from progressing in a career.
What is a typical day-to-day work life look like for you now, and how did it also look like back then when you were first starting out?
Yeah, great question. I think the days are very dynamic in the sense that our team works with very dynamic companies that are growing quickly, that are evolving their technology, their capital needs sometimes, very, very fast. And our job is to move with them at the same speed. And so what does that mean day to day? That could mean anything from having conversations on forward planning, what their exit strategy is going to be. Are they hoping to go public? Are they hoping to be acquired? Are they thinking some other iteration? And what I like to call working backwards on, if this is an activity or a potential pathway that's available to them in the coming years, what would it take to get there? And what are the key milestones that are important from a investor perspective, from an acquirer perspective, in revenue, in operations, and other data points that might be relevant, and thinking through with the company, how do they work in that direction, or where are they now, and what might be important areas of focus. So anything from kind of much more strategic work like that to one of my favorite things to do is to actually go out and tour companies. A lot of the companies we work with, they have factories, or they're building factories, they're building product. So going out to actually see the technology. I'm not going to say touch it necessarily, because sometimes that's not the right thing to do. But being able to be on site and get to see real, in the real world, what they're building, what the challenges are, how far they've come along, is an exciting part of the job. And then everything else in between, whether it be thinking through how to invest the capital that they just raised, making sure that they have strong capital preservation while maximizing yield, to other ways that we as a firm can be impactful to their business, whether we might be able to deploy their technology and thinking about strategic ideation and partnerships, to other ways that we can play connector in the way that a financial firm can, whether that's introducing them to investors, thinking through other means of helping that business succeed. Because ultimately that's our goal, and that's what our team is focused on, and the bankers on the team, including myself, are committed to. And helping companies succeed can come in so many different ways, and it can be in the form of lending and debt and capital raising, but it can come in other flavors as well. So ends up being pretty dynamic, and no day is the same. And I have not had a dull day in the 5 years that I've been in this seat. So that's been exciting. And to answer your question on how things have evolved. I do often think about the time when I was an analyst or was an associate and very early in my career and was learning from my mentors and other senior leaders. I would join and I would ask to join as many meetings as possible. And I was very fortunate, I think, in the early stages of my career to have a number of managers and other bankers that I worked with who were very giving with their time. And they were willing to bring me on many meetings and trips where I had the opportunity to learn from the private equity investors, what's important to them, what are the things that they're focused on when they're looking at acquiring a company. And that would really serve me well in terms of being able to build my understanding of business and complement, the financial modeling work that you would do in the office. It's equally important to be out and spending the time to kind of have that rounded knowledge. So I appreciated that very much, and I hope to, and I try to do as much of that, transparency work now and bring interns, analysts, and associates along on all the work that I'm doing so that they can have that, kind of full rounded opportunity to learn and build the skill set that's needed to get to, future opportunities and grow in their careers.
How were your hours looking like when you first started out?
I worked really hard. I think when you're often new, you are learning. Sometimes you have someone to learn from. Other times you are learning by just doing a lot of work on your own. And so I would say I would put in as many hours as needed. Sometimes you stay really late. Sometimes you come in really early. On one of the teams, when I was an analyst, I ultimately was the only analyst on the team supporting 4 bankers, and we had sometimes really busy months where we were screening a lot of different financing opportunities, and you put in as much time as needed to run models, to put together memos, and that's how you learn. You just you roll up the sleeves and you show interest and you're eager and you put in the hours, as they say. So I don't know exactly what it was, but some weeks would be 60 hours, some weeks would be more normal. It kind of fluctuated in banking. I would say it's very much deal driven activity, and so it kind of depends on the markets, what's going on at that point in time, and what the deal flow is, and that will drive your level of work.
Did you find yourself also working on the weekends?
At times, yeah. I mean, if we had deadlines when I was working on the financial sponsors team, which was working with private equity firms and looking to buy out companies, oftentimes there were pretty firm deadlines on those sponsors putting in bids for acquisition, and you ultimately have to provide a stapled financing or some sort of a financing package that is both the equity and the debt, and there isn't much room in terms of when you can deliver term sheets and how that can be sort of met in the market. And if there was a deadline, then you work backwards and you figure out when all the materials need to be put together and in front of the credit committee. So at times, yeah, weekends were in scope, or late evenings and model iterations and various kind of twists and turns, or in order to work with the financial sponsor to put together an attractive financing offer.
Tell me a little bit about the interning process. Have you worked with interns? What is the recruiting like?
Yeah, great question. We in the current division that I'm in, we have summer interns every year. We have a large rotation come in San Francisco, which is where the office that I'm based in. And it's always one of my favorite times because I get to see a lot of eager students coming through that are very interested in the work that we're doing. They have great backgrounds and are very keen to help out in the summer. The summer goes by very quickly. But oftentimes they come from all over the country and come from different universities and backgrounds. And have an interest in working in the commercial banking division, which is what I'm part of. I will say they go through a pretty rigorous process in terms of interviewing and getting placed throughout the country, and then hopefully those are folks that we can look to bring on as future analysts as they graduate in the coming year.
So to kind of end things off here, one last piece of, I'd say, advice for the younger generation. What would you say, looking at your career and everything you've learned, what would you say is your biggest piece of advice for someone my age who wants to get into finance, who wants to excel, and who wants to be successful in this field?
A few things. I wouldn't say it's one item. I will say at a minimum you should stay extremely educated on the business world, and that could be daily reading of Financial Times, Wall Street Journal, The Economist. Those are usually the three things that I at a minimum rotate through. So I think those are musts just to be on top of global markets and events and developments to complement the work that you're doing in school and getting the fundamentals of finance. I think those are table stakes. And then I think the people who have the most interesting careers are people who never stop learning. And so building that into your repertoire and your mindset, I think, is really, really important. Building relationships, and as I mentioned before, really being intentional about networking, doing informational interviews throughout your career, not just in the early days, I think is really, really important. I think that curiosity can help inform future calculated risks around your career, and thinking through, you might start in a certain area, you might move into another area, and I think having that network, building that communication skill set, and having that constant curiosity are going to be really important to succeed in the future.
Great. Thank you so much for being on the show.
Thanks so much, David, for having me. I appreciate it.